Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the downside move that really started on Friday afternoon, but that larger time frame bullish bias continues to be very active, and responsive buyers were active ahead of the 62.75 high volume node, and we've seen now a reversal back up towards the first hour range from Friday. So heading into the open, we know that the buy side has been a bit more dominant, and on the larger time frames, the bias is going to remain bullish, irrespective of some short-term price fluctuation here. So even if we get a pullback, it doesn't really matter. That overall bias is going to be bullish. It's just that now, on the smaller time frames, we are trading within a fairly defined balance area. So even though we are directional and the underlying bias continues to be clearly to the upside, we are trading within a range, which means that we can still get reactions at the resistance areas within the balance. So as we go higher, for example, we can still get a reaction at 82 to 83 and 86 quarter to 88 quarter. Short term off the open, we have pre-market resistance at 76 to 77 half, and as long as we are seeing some sustained upside momentum, we can get a breakout above that area, and that would confirm the strength that we've seen in the overnight session. On the downside, we have short-term support at 72.5 and 69.5. Those areas essentially mark breakout areas from the overnight range that developed early in the session. And as long as ES is holding above 72.5, we know that there's still potential for an upside break. Whereas a break below 72.5 and 69.5 would tell you that the strength that we saw overnight is now going away, and now ES may have to pull back a bit more to look for those responsive buyers yet again. So on the downside, we have support 64.5 to 66.5. We have the high volume node of the recent balance area at 62.75, and then the support zones below are going to continue to be active. So 58 quarter, 60 quarter, and especially 51.75 to 53.75, which is a very good support zone because it does mark the bottom of the recent range. So in most scenarios, first time down into that zone would be a automatic long setup. But that's something we'll deal with once the market actually decides to head there. For now, the bias continues to be bullish, but with the understanding that the market is trading within this defined range and balance, and for that reason, we have to be a bit more nimble with our intraday bias. The underlying larger time frame bias continues to be bullish, which is why we can still look for long setups when we are getting good trade location at the support zones. But within the balance, we have to be a little bit more nimble with our bias because it can go back and forth intraday. So off the open, we're going to keep an eye on 72.5 and the 76 to 77.5 area. That's going to help define which side is being more dominant off the open. Above that, if we can get a breakout, 82.83 is the short-term upside objective. 86 quarter to 88 quarter is the primary resistance on the upside, and then above that we have 93 to 95 as key resistance. On the downside, 64.5 to 66.5 marks the bottom of the overnight range, and then we have 62.75 right underneath there. In order for the market to actually go down there and then break below those areas, we would have to see some pretty excessive downside weakness. So we would have to see some more weakness on the Russell. Nasdaq would have to start breaking down, and we'd have to see sustained downside momentum in order to break the initial support and the 62.75 high volume node. Absent any excessive weakness, the market can still find buyers over there, and that larger time frame trend can still come into play. Looking at the econ calendar, we have the ISM manufacturing index out at 9 a.m. Central Time. So in the first 30 minutes, you'll want to be a little bit more conservative, simply because of that economic release, which can move the market, at least in the short term. So heading into the release, we prefer to be flat, and for that reason, it makes sense to be a little bit more selective in the first 30 minutes and then get a little bit more active after the econ report is out of the way. So those are the main ideas heading into the open. That's really the underlying context that we're currently working with. overall bias continues to be bullish. Short term, a little bit more neutral, and just the willingness to be a little bit more nimble on the day time frame, be a little bit more conservative in the first 30 minutes, and then get a little bit more active. So those are our main thoughts. Let's see if the buy side can maintain control from here, and we'll take it from there.